What up, investors? All right, it's my third time trying this. We've done Tesla, we've done GM, we've done Ford, we've done Stellantis, we've done everything. All right, Mercedes. It's time to address the elephant in the room, the big champion, most car sales in the entire world, Toyota Motor. Here's what we're going to do. We'll do a little bit of an overview. We'll take a look at some of their offerings real quick. We're not going to dive too much into the specs. We're going to go and talk about their financial situation, like what's going on with the internals of the business. We're going to look at things like their annual report, their 20F. Okay, it's a Japanese company, so you know you're trading in the foreign slips. We got ADRs out here. Okay, so a foreign company listed in the United States. Then we're going to talk a little bit about their dividend and financial health. And then we're going to try to draw a conclusion as to whether or not Toyota Motor is worth a buy right now, or whether it's even in the top 3 or top 5 of car companies to own out of everything that's available out there. All right. So without further ado, here is Toyota Motor. Okay. So on the front page of their website, they got Corolla Cross Hybrid. For some odd reason, the mini SUVs, the little SUVs are the most popular cars right now. I don't even understand why. I don't know why, no pun intended, Tesla Y sells as well as it does. All right, so everybody wants those mini SUVs for some odd reasons. Personally, I'm not a fan, but to each their own. So let's go into their offerings a little bit just to get an idea of the company. So we already know it's a Japanese company. We already know it sells the most. But look at these vehicle offerings, man. There's so many. This is just cars and one minivan. What I'm amazed at is that this company still has like 3 roadster offerings for people. Many people are going away from the fun cars. These guys and gals, they've got 3 of them. All right, look, we've got the GR Corolla right here. We have the 86. I didn't even know they make the 86 anymore. I thought they did away with that. And then of course we get the Supra. So there's a 2023 version of the Supra. We're not gonna do specs on any of the cars except maybe this new Crown. I didn't even know they're coming out. Like honestly, I don't know what the Mirai is. I've never seen it, and I don't know about this Crown. I guess this is a new one. And it looks pretty cool. It's a hybrid. Look at this. Look, this thing is gorgeous. I mean, you might not think so. Of course, you know it's subjective. It is a Toyota, but I think it's neat. It's very modern. It definitely screams like 2023, unlike some other electric slash car companies out there, which are going back in time. You know what I'm talking about. So these specs over here. Let's just go into it real quick. Under performance, just so you can see what we're dealing with. You know, you can get the sports version here. It's more powerful, but then you know it doesn't get as good mileage and whatnot. They play around with the ratios, and the horsepower difference is from 236 to 340 for the platinum version. And you can see the power here. So they got a bunch of different ways, a bunch of different levers, no pun intended, to get torque, pun intended. Okay, I'll stop doing that. Sorry. To get different amounts of horsepower from each part of the car. So, you know, they got a turbo hybrid, basically, car that can be modded up to have quite a bit of performance. And I quite like the idea. So car looks like this. Let's go a little bit more into see what kind of other vehicles they offer, right? So we got trucks. Okay, we got 3 different trucks: the Tacoma, Tundra, and Tundra iForce Max. We'll talk about electric vehicles at Toyota in a little bit. Crossovers and SUVs. Look at this selection. What is going on here, right? Highlander, BZ4X. I don't even know what this one is. Highlander hybrid. Sequoia, RAV4, RAV4 Hybrid, RAV4 Prime, Corolla Cross Hybrid. We got 4Runner, Venza, the Venza, guys, the Venza. And then we got electric. Look at this. It's just pages upon pages of different models you can buy. And these are 2023 models. You know, a lot of companies got like 2 vehicles or 5 or something. And I actually kind of like that all these vehicles are really efficient nowadays. Even the big Sequoia is getting 21/24 miles to the gallon. It's kind of crazy. But I'm not even going to list them all. I'd be out here listing things forever. So a lot of these are, of course, duplicates because these are just the electrified vehicles. And then they have new projects, right? Grand Highlander. Okay, Trail Hunter. No picture. But so these are the offerings. Now, these guys got the most vehicles sold worldwide last year and probably going to win this year as well. They're a pretty worldwide business. They do a lot. So what we're going to do here is start taking a look at the company itself and the stock and how it's been performing. So I had a nice day today. It was a 0.32. This is April 18, 2023. So in the last year, it's down almost 20%. Last 5 years, up only 6.6%. And max, you can see a huge increase all the way back from 1981, from when they first started entering the American markets and competing with the American companies. So it's been a steady trend upwards, so that is a good thing that the stock has an upwards trend over many decades now, like over 4 decades. The price target of analysts, they have it up from here about 6%. Immediately, I look at these numbers right away to see if they're actually earning some cash. And then my eyes go upwards here to the revenue market cap of the company. So before we go into the financials, that's kind of like where my eyes cross. I also like to look at this little overview window. It just gives you a brief analysis of how they've been doing over the years for the last 7 years. The blue line here is their revenue, and the green bar is the earnings. So even during 2020, this company managed to make money. All right, the revenue didn't grow that much, neither did the earnings, but they're making money each year. And they're returning some to the shareholders. When we talk about dividend, you'll see. Next, financials. So strap in here. We're going to do some numbers. We're going to go into quarterly to get more definition. Let's look at the revenue. The revenue for Toyota Motor, increasing. Now, this is important because many companies actually peaked out in 2021. And they have struggled in 2022 to get the same type of revenue as they did in 2021. So this company is actually increasing revenue. So that's really good for them. Net income. We'll skip over the breakdown of all the, gross profit, operating income, etc. So net income here. Okay, so the previous 2 quarters. Oh, by the way, these numbers are insane because they're in yen. Okay, so just look at the graphs. Don't necessarily look at the numbers unless you're really good at converting yen to US on the fly. All right. So 1 yen is like $1 is a little bit over 100 yen, probably like 120 or so, or that's where it's been historically. So unless you're really good at multiplying, just look at the bars. Okay, so pretty steady. Obviously an understandable dip here in the second quarter of 2020. But other than that, it's been pretty steady. Margins. We'll just look at the profit margin. Not bad, 7.46 in the latest quarter after a bad 4.71 quarter. But generally average around this area, about 7.5 I would say. So not too shabby. It's a car company, so it's hard to get huge margins out there. I've seen companies with better margins than Toyota, but it's decent. Statistics. Oops, that is not statistics. Statistics. These 2 numbers, right away. Boom. Makes me cry. Why does it make me cry? Well, enterprise value is like more than $100 billion higher than the market cap. Okay? What does that tell me? That they have a ton of debt. So immediately I thought, when I first looked at this, I'm like, oh, they've got to have this financing wing that, blows up the asset and liabilities on their balance sheet. And I was right, but upon further inspection, looking into the 20F, it's actually not as bad of a problem as companies like Ford and GM. When I looked at Ford, it was by far the worst offender. I had a speech in the GM video or in one of the videos, maybe on the Fisker or Mercedes ones, I can't remember which one, where I ranted about how I don't like this intertwined, efficiency driven mixture between finance wing and the car company, because it sets up bad incentives, false incentives for the company. And even though it works well in good times, it leverages the downside as well. It decreases the resiliency of the company. So for that reason, I don't like it. I don't like that they make that choice for the investor, and a safe investor is no longer able to invest in the company. I guess I'm going to continue this rant a little bit, okay? So here's what I mean. Not only does the extra finance wing serve as leverage on the up and the down, but what I don't like is that they don't give the choice to the investor. So they actually take away investors by levering themselves up this way. Because if I was a safe investor, they don't give me the opportunity to lever up myself. You see, I could take out margin if I want, and if I like the business, right, I could own 2 times as much and just pay my own interest on it on my margin account, right? But they don't give me that choice. They leverage the company for me. So if I am a safe investor, I don't have that opportunity. I could hedge, I guess, but I mean, anyways, I'm not even gonna go into it anymore. So moving on. So it's not as bad, not nearly as bad actually as GM, even though it seems like it on the surface, as GM and Ford. Let's go into the balance sheet so you can see. Look at this, 108 billion, these are dollars I believe, $billion in debt. And this is especially bad because it's not part of the finance equation, the asset/liability thing. I mean, it is partially, but not to that big of an extent. Now, this is a lot of debt, guys. 108.3, right? For a company, for a car maker that's got an enterprise value of 295, okay? A third of the company, basically, its value is debt. I mean, 100 billion weighs a lot. So, I don't know. Next, let's go into the 20F. I guess we'll talk about what I found here. The 20F is a filing that foreign companies are forced to have if they want to list in the United States Stock Exchange, like the NYSE or the NASDAQ or something like that. Okay, so they have to file it, and it helps the American investors because the numbers are presented in a very standard form, and they have their own guidelines as to what counts to what, and they can't deceive investors as easily, maybe not intentionally, as they can when they don't have to file the U.S. regulated filings. So I went into the 20F, and I learned some things from there. So first of all, it gives you plenty of things to try to figure out and get a better idea of the business itself. So as you can see, for example, 23.4% of Toyota units are sold in Japan. 29.1% are sold in North America, so they sell more vehicles in North America than their home country. 12.4% are in Europe, and 18.7% more in Asia. The remaining 16.4% is just the rest of the world. What's interesting here is that the Asia market is smaller than their domestic market of Japan. And I don't want to stir any beef here, okay? I don't want to poke any hornet's nest, but Toyota's never going to really be a big seller in China. I'm just saying. So they have that to work with, okay? So they have to try to hit the rest of the countries. And a lot of the Southeast Asian countries have a relationship with China. So they kind of have to pick sides a little bit when it comes to business, at least the political sides of things. Individuals, not so much, right? I'm sure the individuals make more rational decisions. But anyways, let's get off this topic before I say something bad. First of all, let's take a look at this, right? The holdings of Toyota Motor. The holdings of Toyota Motor. So these are all their different holdings around the world. You see a lot of them in Japan, a lot of them in the United States. So they're different entities held by the umbrella of Toyota Motor. So there's some interesting holdings here. Okay, a lot of them are partial ownerships, but they're over 50% on the voting rights and the ownership. So basically it means that Toyota Motor is a complete controller of the company. If you have over 50% of the voting rights, then you're basically in complete control of what happens with the company. So some interesting things here. Look at this one, 56.51%, right? Caterpillar Corporation, I don't know. It probably provides some kind of technology, right? But there's some really interesting ones here. Like for example, where was it? Oh yeah, so Daihatsu Motor, right? Hino Motors, okay, 50.11 and 50.18 interest voting interest. Right, so these are interesting ones. What I found interesting that Toyota Canada, they actually only have 51% of the company for their Canadian wing. I don't know why that is. A similar story here in Turkey. They don't own 100% of it either, only 90%. They're still operating in Russia, I believe. But there's a few other interesting ones, like this one, PT Astra Daihatsu Motor in India, 89%. All right, and Kuozui Motors in Taiwan, 70%. Okay, so they have a few subsidiaries that are, very interesting in nature. And then they have the like a Toyota Leasing in Taiwan, 70%. More Daihatsu, and finally, they have that finance wing in Australia as well. I think they may have one in the US too. Yeah, Toyota Motor Credit Corporation in the United States. So they have a bunch of these finance wings. Moving on through the 20F. So here's what I'm looking at. This is their assets and liabilities sheet. Okay. I'm going to look at these current assets situation first. So these assets, cash equivalents, these are all fine. Receivable, this is what I want here. Receivable related and financial services. Okay? And that looks to be like, these are in million yen. So that's like 6 trillion, 6.7 trillion or something like that. Let's just treat it as billions for right now, because trillions is like way out of the scope of my current, comprehension. His numbers are getting way too big. So let's just call it like 6 billion. Okay, I'm used to billions. So that's 6.7, right? Other financial assets, inventories, okay, that's fine. Inventories, total current asset 22.7. So this is the big one, what I'm looking for, 6.75. So what I'm trying to find out basically is how big of a role does their finance wing play into their business. I want to find out where, the money that they use to lend out to consumers, not necessarily to just dealerships and to their own businesses, but to consumers, and how much on the hook they are in case of a recession. Okay, that's what I'm trying to get at. So here's more trouble here. 12.5, right? Let's call it billion. Well, let's just call it trillion. All right, trillion yen. 12.5 trillion yen. Okay, assets. Vehicles and equipment operating leases. Okay, 6.2 trill. And then property, plant, equipment. These are pretty static at 26 trill. That's fine. And then over there, so total current and non-current assets, 62.2 trillion yen. Now let's go into the liability side of things, and I want to see how much of that is offset. So we can see that they have liabilities, short-term and current portion of long-term debt, 12.2 trillion. Trade accounts and other payables, look how small it is in comparison, right? 4 trillion yen. So that's what they owe basically now. So if people don't pay their loans on their cars, they're not going to be in trouble. Other financial liabilities, liabilities for quality insurance, they are on the hook for retirement benefits liabilities though, 1 trillion yen. This is another, I don't want to say a problem, but a quirk for car companies is that they own retirement to their employees. They do that. Ford had that, GM had that, and Toyota is no exception. I think that Japan is really big on taking care of their people. And apparently GM and Ford used to be as well, and still are, I guess. So it's actually not horrible, right? 38 trillion in liabilities versus 62 trillion in assets. It's not the worst thing in the world. Total shareholder equity, 24 trillion yen. Not the worst. So, which brings us to the dividend. Okay, I noticed this is a listing of dividends. Now, a lot of the ADRs, okay, when foreign companies list in the United States, they usually pay out dividends once or twice a year. So in this case, with Toyota, they decided to pay twice a year, and they do about $2 something and change per dividend. So that's 4 and change, which equals out to roughly 4%, or maybe a little under 4% dividend. Okay, maybe 3-4% dividend. So don't look at these figures, because I guess they either skipped on dividend or whatever, or didn't record or didn't register. It doesn't matter. So 3-4% dividend. And I actually like that. I like the fact that they're not trying to dish out immediately all of their money, all of their earnings to the shareholders, and they're keeping their financial health in check. So that is a good thing in my opinion. Okay, if we look at total debt, 1 second. So we're going to finance balance sheet. If you look at the total debt, it's actually going down on quarter by quarter, Sally, not yearly. Total debt, look the trend. They've actually paid off some debt in the most recent quarter. Traditionally, they had about 20 billion, or is that trillion, in debt. Yeah, it's trillions of yen. So about 20 trillion in yen in debt, but now was up over 30. And I think they're trying to bring it back down to 20. I mean, my personal opinion is that time have changed, Toyota. Right? Time have changed. Like, interest rates are no longer zero. And you're not incentivized to be carrying such a large amount of cash if you're not going to be using it for financing purposes. So pay that thing down. You know? That's just what I think on the topic. And it looks like they're listening. I mean, not to me, but probably to some of their financial advisors over there. And they are paying off some of that debt. So that's good on them. I like it. I think would I buy this company? Would it be a top 3? Let's answer some of these questions. First of all, is the company resilient? Is it going to survive a recession, even as deep one as the pandemic or something like 2008? The answer is yes. The finance wing is not as big and bloated as it is in Ford and GM. The huge brand name and smooth of operation is going to definitely hold up during tough times. And they even kept on getting plenty of revenue through the tough times of 2020, even though their earnings and whatnot was not as good, etc. And they even kept out their dividend, didn't even decrease their dividend that much during that time. So very steady. I mean, I understand that, Japan didn't get hit bad until later on, like a year or two later, but still, that's pretty impressive because their global sales were hit even if things were going okay at home. So pretty impressive stuff. I think that the management's good. I think they're a pretty resilient company, even though they're being slowed down by the debt. And I don't like the fact that they're carrying it and they're leveraging the company a little bit. But I guess this is a case where I think they're using the finance wing kind of appropriately. They're not trying to make their business all about that, and trying to really go and like min-max, their earnings just so they look fantastic. Like there's plenty of safety, I think, built into that relationship there. So I don't think it's a huge problem. So is it going to survive the next recession? Yeah. Okay, it's going to be fine. I mean, it might take a hit, but it's going to survive. You're not going to be taking huge capital losses. Second, right, this is the conclusion here. Second of all, would it be a company I'd buy? And what if I had to buy a car company, would it be in my top 3? This is tough because it might be number 3, especially the companies that I've been looking at. Okay, it probably would be definitely behind Stellantis. All right, definitely behind that. Maybe even behind Mercedes. Kind of hurts me to say, but probably behind that. When it comes to just value, just from a personal perspective, obviously for some people Tesla will be number 1, even though it's valued crazy high. But let's take a look at the markets. Okay, I have a bunch of graphs that we haven't explored yet. First of all, this is how dominating. I just want to continue to paint the picture as to how dominant Toyota is at the moment. So look at, these are vehicles. These are top vehicles globally in 2021. Toyota's got like the number 1 spot, number 2 spot, okay? And then number 5 spot. They got 3 out of the top 5 vehicles sold. That's crazy, right? Tesla's down here at number 9 with their Model 3. So look at this. Best-selling passenger car worldwide in 2022. So worldwide, 2022. Toyota Corolla, huge passenger car right there. Look, boom. Toyota RAV4, and then Ford F-Series. I'm actually surprised. And then look at the first electric model. Tesla Model Y is just killing it. And I just cannot understand why people find that car attractive. You know what it reminds me of? Is those old Opals. You guys remember that car? Oh, I gotta search it up. I have to search it up. I'm gonna try to search it up. Hold on. Opal car. The old school ones. Let's see if I can find an image. The 3 and the Model Y remind me of the old Opal. Let me see if I can find exactly which model I'm looking for here. I hope I can find it, because once you see it, you won't be able to unsee it. Okay? These are all pretty modern. But there's one with kind of like the bubbly eyes. Do you know what I'm talking about? Oh, come on, I have to find it. It's like, oh man. Okay, well, anyways, I can't seem to find it right now. But it had this vibe here of this car. Do you see it? Let me see. See it on the right? That kind of vibe. Well, obviously it's not that car. It doesn't look anything alike. But it definitely had that vibe. But anyway, I'm sorry. We'll just continue, and we'll forget I ever said this. All right, moving on. I mean, this is this is kind of a new version of it. Anyway, moving on. Sorry about that. It's just not happening right now. So, and then Toyota Hilux here. Best-selling leading car brands in the United States 2022. This is just in the US. Okay? Ford, Toyota is number 2 in the US. And by the way, one thing I didn't discuss is the fact that Toyota hasn't really competed in the EV much. Like, they have some, a lot of hybrids, but not a lot of EV. And I think they kind of ceded that competition. They're just focusing on the hybrid and the motor. Like, I find that decision kind of interesting. And by the way, here's a chart that supports this finding. I mean, it's not secret. But these are basically global EV sales by OEM groups for 2022. You can see BYD is leading with their electric and the hybrids. I think PHEV stands for like a hybrid, like plug-in hybrid EV. And then the green is just pure electric. So BYD is leading here, and then Tesla is number 2 in the world, and then VW, right? GM, Stellantis, Hyundai, BM, Geely Auto Group. I don't even know what that is. Mercedes-Benz Group did a video on that. Check it out. I mean, on the company, not on their EVs. But they do have plenty of EVs coming out. R&M, I've never heard of that. GAC, never heard of it. SAIC, never heard of it. Cherry Automobile. I have no idea what that is. Up 136%. Woof. Okay. Volvo and Polestar. Okay, that's a good one. Changan Automobile Group. Dongfeng Motor. Never heard of that one either. Up 137%. Ford. There's so many EVs coming out. Ford up 55%. Hozone Auto. Hozone. Okay, so that's cool. Up 113. CHJ Automotive. Okay, never heard of it. Great Wall. Ooh, Great Wall Motors. Down 4%. NIO, that's a popular one. That used to be a really hot, high-flying stock in China. A Chinese company. Xiaopeng. That's a popular one too. And there comes Toyota Motors. Like way behind these brands I've never heard of before. And Toyota Motors is the number 1 car seller in the entire world. And they're like number 20 or something plus on the list of EVs sold in 2022 and last year. They're really behind. So they've completely seeded that game. So it makes me think, it makes me wonder, like, do they actually know something that the rest of us don't? Or is it some kind of executive decision? Like, do they think the technology is just going to be kind of a waste of time and they're not going to be able to, like, or do they just think that they can't compete, they don't have the expertise, or was it a fumble? Okay, was it a fumble? Was the management, the people in charge, did they, like, not see this coming? Like, did they think that EV was just like a fad, in 2014, 15, 16? And they're like, oh, Tesla, no one wants EVs. Did they just, was it a fumble? Or do they think, like, it's not, the ICE improvements will actually outscale the EV and the EV will never be a better buy, and people, once they figure that out, then they'll just switch back to plug-in hybrids, which is what Toyota does the best, right? Is hybrid actually better? Is plug-in hybrid better than electric just because of the versatility? Are they like way ahead of the game, right? Or are they like really far? This is where you come in, all right? This is where you write down what is Toyota's strategy here. I want to know. But it's a really big point, because if it is a fumble, it could cost them their leadership. They're not going to be the leading company for long. Well, they might not be anyways, because that's just the nature of competition. Like, when companies get big, they get stale and sometimes and they lose their edge. So it happens, but still, like, is this mistake going to cost them? Like, or do you think that it makes it that much of a better investment because they don't have to waste money producing electric vehicles at a loss for years and years until maybe one day they outcompete that entire list of companies in quality and whatnot, and they're able to come on top as the winners, right? They don't want to take that risk. So I want to know what you think about this. Okay, how is Toyota positioned for the next 10 years? Are they going to come on top? Are they going to look like the smart ones, being very cost conscious and very selective with their projects? Or are they just too large, not nimble enough, too slow, and can't see opportunity if it slapped them in the face? Let me know. All right? That's Toyota Motor. Mic drop.